Well, it's coming to an end. 2020, it's become kind of a cliche to say, oh, 2020, what a year, what a crazy year. I've never seen anything like it. And from multiple aspects, it's kind of true. The cliche is true. 2020 was a wild ride, especially for us stock market investors. And here at the Touchdown Trades community, we absolutely crushed 2020. But I think there's multiple signs leading to a stock market pullback and maybe even a stock market crash. So in today's video, we're going to be talking about why I believe there will be a stock market correction, a stock market pullback, or a stock market crash in 2021. We're going to talk about why I think that's going to happen, the multiple factors that are leading me to believe that there will be a severe correction in the stock market in the near future. And we're also going to talk about how I plan to attack the stock market when this correction takes place, what I'm doing with my money now, what I'm doing with my portfolio now to prepare, and why I think I'm going to profit big time from this correction. 2020, Rhonosaurus Rex is coming. Everybody run for the hills. Take your money out of the stock market. And everybody did. Everybody did just that. Everybody pulled their money out of the market when the Rhonosaurus Rex first came to play, and the stock market reacted accordingly. It pulled back significantly. We've never seen anything like it. I don't care who you are. You can say, oh, I was here during the dot-com bubble, or I was here during the Bitcoin bubble. Nobody has seen anything like that. But never before have retail traders had the power to move the market. But because of online commission-free brokerages such as Robinhood and Webull, speaking of, 4 free stocks, if you use my link in the description down below, deposit $100 or more, Webull, the top broker out there, will give you 4 free stocks valued up to $1,600. Moving on, we had the power to move the market, and we did just that. We bought the dip, us retail traders and investors, as hedge funds, institutional investors kind of stepped aside. We bought the dip, and what happened next was absolutely nuts. The stock market has recovered. We broke all-time highs. The EV sector, the sector that most retail traders have been attacking, and big institutions mostly have been standing on the sidelines, the pundits standing on the sidelines saying this is a bubble, it's about to crash, and it just keeps going up. Well, I think we need to take a step back. We need to look at several of the factors that are pointing to a correction, and I think it's finally about to happen. So let's break it down, but before we do me one favor. I ask for one small favor every video. I bring the winners to the table, and all I ask for is for you to like the button, go down there and click all the buttons, click the subscribe button, the notification bell, and check out Webull, where you can get 4 free stocks when you use my link. All right, let's break it down. Let's get it. All right, trader and investor homies, let's talk about why I think there's going to be a pretty significant, I got the S&P 500, the SPY chart pulled up right now. Let's take a quick look at it and talk about what's happened over the last few months that's leading me to believe that there's going to be a steep correction in the overall stock market. So we were trading at all-time highs prior to the Rhonosaurus Rex. Right here is when the Rona became a serious issue. People started to realize how significant of a deal it actually was. Everybody began pulling their money out of the market, and we fell off a cliff. We hit bottom down here at $218 per share for the SPY. This is where retail traders started to try to buy the bottom. Buying pressure started to come in. We started to base out, and ever since we hit that low, we haven't looked back, and we just skyrocketed to the moon. We're currently trading at all-time highs on the S&P at 366. And that is just absolutely outrageous considering where we are as a country and where the economy is. So the first reason that I'm believing there's going to be a pretty bad pullback in the overall market here coming up soon is the unemployment rates. They are steadily retreating. They're going down, right? But they're starting to baseline out, and they're still very high. We were at extremely low unemployment rates prior to the Rhonosaurus, under 4% right there. And then all of a sudden, it just went absolutely bonkers when the quarantine, when the shutdown started to happen, and we breached 15% at one point. And then when the economy opened back up, we pulled back down, and we're currently at about 7% unemployment rate. But if we look at this graph, we're starting to base out around 7%, as a lot of restaurants, hospitality industry jobs are just gone. And a lot of jobs probably won't even come back, as companies have learned about telecommuting. Business travel has been cut probably forever, pretty drastically. So a lot of jobs aren't going to come back. So I believe this unemployment rate is going to hold steady at the 6 or 7% range, which is still pretty high considering all things. I know some of you guys are saying, wait a second, there's a vaccine en route. Isn't this going to help the unemployment rate? Everybody's going to get the vaccine and this is going to boost the economy. Well, I'm not so sure about that, because first of all, not everybody's going to get the vaccine. There's some pretty serious side effects. There's talk about getting sick for 1 or 2 days after you get the vaccine. I think a lot of people are skeptical on the vaccine and aren't going to get it. Sure, a lot of people are going to get the vaccine. It's going to help, and herd immunity combined with the vaccine is slowly going to take care of the Rona, and the cases are going to gradually decline over time. But I don't think it's going to be a boost to the economy, a boost to the unemployment numbers that we are seeing priced into the overall stock market. How about the housing market? The housing market is almost crazier than the stock market. The housing market here, I have a chart pulled up, and it just is going straight up, right? And that can't continue. The housing market, very similar to the stock market, is cyclical. You take a move up, and then you have a pullback. Then you take a move up, you have a pullback, and people buying houses right now at all-time high average housing prices. So people buying up here, they're going to be underwater the next time there's a housing pullback. So if you bought a house in the last year, the next time there's a housing market pullback, you're going to be underwater. And people who leveraged their money, got pretty suspect loans, mortgages, this is the same thing that happened 2008, 2009, when you got that pullback. People that leveraged their money in order to buy a house that they really couldn't afford, they got stuck, they got foreclosed on, and I think we could see something not as drastic, not as crazy as 2008, 2009 in the housing market, but something very similar. We also have the Federal Reserve slashing interest rates, propping up the stock market, and this can't continue. Sure, they can do it for a little bit to try to help things out, try to slow the bleeding, but they can't continue to prop the stock market up. And when they slowly have to stop putting money into the market, stop keeping the stock market on both of their shoulders, we're going to see a correction in the market. And I think it's going to happen sooner than later. The amount of retail money that came in the market is astounding. Retail traders came into tech stocks, EV stocks. Look at Tesla. It has been absolutely crazy. We hit lows of $70 a share. With the Rona, we ran up all the way to $650, almost $700 a share. That is a almost 1,000% run we've seen in Tesla over the last 12 months or so. How about stocks like Workhorse, Hyliion, all huge moves. The EV market's been crazy. NEO, tech stocks. Let's think of some tech stocks. How about Square, Roku? I mean, everything's just been crazy. And it's primarily been retail money pushing this wave. And I think once the rug is pulled out, retail traders are the first ones to panic. Hedge funds can hang on, and hedge funds can hold on. We'll talk about the institutional money in a second. But another reason I'm thinking that there's going to be a crash is once we get a little bit of a pullback, retail money panics, the stop losses are triggered. It's going to be a flash crash to the downside when all the retail traders like me and you panic out and stop out of their position, just pull their money out, secure their profits. There's going to be a flash crash, and I'm going to be waiting, and I'm going to be waiting on the sidelines with some cash ready, and I'm going to strike. And finally, the last reason that I think we're going to see a pullback here in early 2021 in the market are hedge funds reallocating their portfolios. So typically hedge funds keep a certain amount of their portfolio in stocks and a certain amount in bonds. I think it's usually like 60% stocks and 40% bonds. maybe 70% stocks, 30% bonds. And since the market's been so strong, they're going to have too much money in the stock market. So let's say a hedge fund made a 30% return in 2020. They're going to have to take that 30% profit out and move it to bonds per their fund rules, their fund requirements. So imagine all the funds on the street did really well in 2020 because the market was so strong. So they all have to pull some profit out of the market, move it to the bond market. That's going to create selling pressure, which could start the flash crash that I was talking about. And once that selling pressure ensues, the retail traders, their stops get hit. They panic out, and you get the hedge fund selling, you get the retail traders selling, and it's just mayhem from there. You get a quick 30% crash, and then the hedge funds are like, wait a second, we were maybe too fast. We need to buy this dip. They buy. The retail traders say, wait, I want to buy this dip too. They buy, and that's when we find a bottom. And let's talk about how I plan to attack this flash crash that I'm expecting in early 2021. So as of right now, I am not opening any naked positions. What I mean by that is I'm primarily going to be selling covered calls. If I see a really good deal out there, I will attack it. If I see a growth stock that I think is undervalued, I will attack it. But number one, I'm not buying any value stocks right now. No value stocks, only growth stocks, because growth stocks don't really depend on the numbers as much as value stocks. Growth stocks are more story orientated, right? They're more on hype, more on FOMO. So I'll take a stab at one of those. They're faster moving, so you can be in and out, maybe just a couple weeks, maybe a couple months. You can be in and out with a nice return, and they're not as number ratio orientated versus value stocks. But what I am doing is I'm doing covered calls. You can see my small account that I opened here for the $1 Million Challenge. I'll be doing an update on that $1 Million Challenge here shortly. I deposited in a starting amount of $2,500 right here, and I've added only $1,000 more right there. We are currently up about 24% on this account on our money. So it's doing real nice right now. We can see that we currently have a value of about $6,600, and the returns are just steadily climbing because I've been pretty conservative with this account. My other larger account I'm a little more aggressive with, but I want to get this account up over probably $25,000 before I start stepping on the gas pedal. And also I'm waiting for that correction that we've been talking about. But what I'm doing while I'm waiting is selling covered calls. We can see here Blink. I bought 100 shares of Blink Charging, and then I've been doing this for 3 or 4 weeks already, and I'm selling the weekly call options $1 or $2 above my average price. Blink Charging is trading at $27 a share. You buy 100 shares at $27. You then sell a call option, the $28 weekly call option for $1. Call it, I think I sold it for like $1.25 per contract. So you take in a credit of $125 for that contract. That lowers your average price to $25.75, and then I've done that 3 weeks in a row. So my cost basis has been dropped significantly. If the stock ends up closing above your option price, you just lose your 100 shares, and that's all that happens. You keep the credit, you keep the profit. So this is a very low risk way to attack the market when the stock market is extended. If you're not sure what covered calls are, you can check out Investopedia and just Google covered calls Investopedia, and it'll give you a really nice description on what covered calls are. Maybe I'll do a video on that, but that's a topic for another day. Let's talk about my plan for once the crash happens. So what I'm doing right now is I am keeping at least 50% of my portfolio cash, keeping 50% cash, and I'm creating a list. And I recommend everybody does this. Create a list of the top 5 stocks that you want to own. You want to own stocks right now. They're too expensive. Create a list of 5 stocks you want to own and create a buy zone. Create your plan. I always talk about having a plan because when that time comes, when the market's down 4% every day for 2 weeks straight, you want to be ready. You want to have some cash on the sidelines, and you want to have an idea of what stocks you want to buy at a discount and where you want to buy them. You don't just want to be a deer in the headlights and miss the opportunity. So what I'm doing is I'm writing down what stocks I want to own. One stock that I would really love to own at a discount is SBE, Switchback Energy. I am in love with EV charging. I think it's going under the radar versus the actual EV auto manufacturers, and I would love to own this SBE at a discount. So if we get a drastic pullback on this, my buy zone right now is right here at the $21 level. And I know that seems like a crazy drop, but if we see a significant pullback in the tech stocks, I think we could see a crazy pullback in EV stocks as well. Let me hide my face real quick. So if we see a pullback down to this $21 level, probably from 23, 24 area, that's my buy zone, right? That's my plan. I have a plan in place. I have an idea of where I want to buy and what stocks I want to buy. Also, I'm watching this RMG, another EV related stock, but not an EV auto manufacturer. They manufacture batteries, and I think it's kind of going under the radar versus, even though it's made a crazy move, right? It's not getting the attention that an EV auto manufacturer would be getting. And if any EV auto manufacturer had the same numbers of this RMG, had the ratios, the revenue that this RMG has, they would be trading 10 times higher than this RMG. But because Romeo Power is not an auto manufacturer, they are not trading at some crazy valuation. So I'm watching this, stalking it from the next pullback. We get a pullback down towards this $17, $16 buy zone that I have. I'm buying. I'm stalking, I'm waiting, and I want to see, and I want to buy in front of this gap fill area. Gaps typically get filled. We've had a nice little pullback these past couple days, and I'm stalking these couple stocks, watching them, waiting for my buy zone to hit, and I'm gonna follow the plan. Another one that I'm watching for a pullback is CCL. Everybody said I was crazy for liking CCL long term back down here, back around $12 a share, and it has since traded up over $24 a share. But it's made the move, and I'm waiting for the next pullback. I think this stock avoids bankruptcy. I think the vaccine, if there's an industry that the vaccine is going to help the most, it's going to be the cruise line industry. If it's not just for the narrative itself, this is going to give the cruise line industry the push it needs to get most of its ships back online, start booking some trips again. And I think these cruise liners, the big cruise liners, CCL, RCL, they avoid bankruptcy. And in a couple years, they're trading back up here. This is just a blip in the radar, and I think these companies survive. So the moral of the story is make a plan, create a plan, follow the plan, have some cash on the sidelines. We're trading at all-time highs on the S&P, the Dow, the NASDAQ. They're all trading at all-time highs. It can continue. There's probably going to be a pretty significant pullback in the market in 2021. Be ready. Have some cash ready. Have a list of your 5 favorite stocks, your 5 top stocks that you want to own in 2021, and attack them when it hits your buy zone. All right, guys. Hope y'all got something from this video. If you did, like the button for me. It really helps me out. Tells YouTube to promote my video. Tells YouTube that these videos contain value. And hit that subscribe button. If you haven't yet subscribed, what are you waiting on? And hit the notification bell. And finally, click the link in the description for Webull. Sign up, deposit $100, and get your free money, legit free money, 4 free stocks valued up to $1,600. All right, guys, I love all of y'all. Catch y'all in the next one. Until next time, peace.